Well, thank you all for coming. I'm Bill Hardy. I'm with the CPA firm of Harris Hardy and Johnstone. Full transparency, I do some work for the church. I know a lot of you all. Dick, you were kind enough to call me personally. Thank you for having me down. So today, what we're going to talk about is what's called the Neighborhood Assistance Program credits. These are credits that the state of Virginia designated for companies, nonprofits, primarily nonprofits that have a combination of either low income benefits and or disabilities. So the child care facility here qualifies for that. And I have a handout for you all, and on the right side is my white paper on the Neighborhood Assistance Program. It looks like this. And then on the left side is the actual application that you would submit to the church for if you were interested in doing this. But basically how this works is individuals, business, and trusts who make a donation to a NAP organization, such as the St. James Church, Child Care, that you get not only do you get a tax-deductible donation, but you get a credit from the state of Virginia on your taxes up to 65% of the donation. The St. James does have a minimum donation of $2,500. There's a maximum that by law of the Commonwealth of Virginia that you cannot exceed $125,000. So if you, an example that I've got on about the fifth bullet down, it talks about that this is what's called a refundable credit. And what refundable credit means, you actually get the money back. So in this example, let's just assume that you had a Virginia income tax liability is $5,000 and you had $4,000 withheld from either your retirement or your wages from your work. And you had a $1,625 NAP credit, you would receive a tax refund of $625. So again, if your tax was $5,000 and you had withholding from sources such as wages or 1099 or retirement or other, even Social Security, and you subtract the $4,000 withholding and you subtract the $1,625 NAP credit, you actually get this money back. You get a check or they electronically wire the money to your account. But as I said, there's more good news. So in addition to the state credit of 65%, you also get a charitable contribution deduction on your what's called Schedule A itemized deduction, which is on your federal return is your form that you fill out when you if you itemize. And you get whatever your tax bracket is, and I'll go through that on the next page, but I did want to point out one thing, that Congress put in a little sneaky way to increase the taxes by doing what we refer to as phase outs. And if your income is in excess of basically $310,000, they start reducing your itemized deductions for charitable contributions, state and real estate taxes. They don't do it for medical and investment interests, but I did want to point this out. So if you're in a real high income tax bracket, you're not going to get all your itemized deductions. So on the next page is what your tax savings can be. And in this example, I have used a 35% tax rate. As you well know, the tax rates start at 10% and they go as high as 39.8%. So I just took a blended tax rate of 35%. I'll go with the one that's a round one number, the $10,000 contribution. So if you made a contribution to the St. James Children's Center, you would get a federal deduction on your itemized deductions for $10,000. And if you're in the federal tax bracket of 35%, you have now reduced your federal income tax by $3,500. That's always been the case. And so now what's the kicker is that in addition you get a state tax deduction, and the state tax rate in Virginia is 5.75%. And by the way, this is Virginia only, so if you're in New York, California, whatever, this might not be a program for you if you're a resident of those states. Then you get this actual credit from the state of Virginia of $6,500. And so you can see on $10,000, you're getting a deduction of $3,500. You're also getting a deduction on your state income tax of $575. And you're getting a credit of $6,500. You might say, gosh, that's more than I gave. So I'm making money here. Well, it's not quite like that, because if you recall, when you itemize and you deduct state and local taxes, the IRS says, okay, now you've got to pick that up in the subsequent year as income. If you take the deduction, if you get the refund, so this adjustment that we do, it's kind of an interpolated circular calculation, but this number of $2,476 is an add back because we are calculating in the refund of $6,500 from Virginia that you get. You have to pay tax on that the subsequent year. And so that's what that calculation is. So in this example of $10,000, you get a total tax savings of $8,099. So that cost of that $10,000 contribution really only cost you $1,900. So that's a pretty efficient deduction. And so I did some other examples of $25,000, $2,500. If you are a corporation or a business, you can do the same thing. I have found that with my clients and all the seminars we go to, that one way that really helps you personally is if you contribute what's called long-term stocks investments. Long-term means you've held it for more than 365 days. So let's just say, I don't know, let's pick on a company here in Richmond, New Market. So if you have $10,000 of New Market stock and your cost basis is $2,000, if you sold that stock, you would pay tax on $8,000, and then you'd pay tax on that gain. So you really wouldn't have $10,000 left over to make that contribution. But if you contributed the equity, the stock, you get, meaning that you legally transferred over to the St. James Child Care Center, you get a contribution of the $10,000, you don't pay tax on the gain, and then this qualifies also for the credit. So it's a nice way to do that. You never want to donate equities that are in a loss position, because the IRS says it's the lesser of the fair market value or your cost. And so if your fair market value is less than your cost, you're not going to get a deduction for what you paid for it. So you want to be careful with that. This is also, again, as I mentioned, eligible for businesses and corporations. Corporations that are allowed to give, property, meaning personal property, like sometimes hotels have given away their old TVs, things like that. So it's a number of ways to do that. Trust, it applies to trust. Trust gets a little bit tricky because most trusts have a lot of what we refer to as portfolio income, meaning dividends and interest, and their tax rates generally are less than 35%. So I generally tell people, I think you ought to look at this personally. That is really, I know I went through this pretty quick.
Bill, have you had many businesses that have paid gifts through this? Because I know businesses are eligible for that.
I actually had a hotel client that did give away their old TVs. Yeah.
What's the total NAP credit that St. James has?
We received $247,000
Wow.
in credits.
And your
So
preference is
that
to get-
equals, that, you know, if we use them all, that would be $330,000 a year.
Oh, wow. Okay. Is the preference to get more like 100 at 2,500, or is it first come, first served?
It's first come, first served.
Yeah, that's a good point.
'Cause I think when someone would just suck up 50 right away, some high net worth person.
And we have, for our organization, have set a limit at 50 for this first year we did. So that we could, you know, make sure, because other groups have said they, you know, would give half of their credits away in one year, but,
Would you say that number again? We got how many?
247,000. And that would equal, if we used them all, $330,000 in gifts.
So how this works, every year the Commonwealth of Virginia, they run on a fiscal year, July 1 to June 30. So they come back, so they have, you know, St. James Child Care Center is not the only one that they allocate credits to. You know, you've got, I don't know, Habitat for Humanity, all kinds of organizations. And so they'll go through the General Assembly, say, okay, we got 10 million, we'll give you a couple 100,000, we'll give you. And sometimes if you don't, it's interesting, if you don't use them, you know, they get upset. So you want to try to use these, because if you don't, then next year they might bump it down for your.
I'm told they definitely do
They do.
reduce you if you don't.
But you reapply every year, then.
You
we get
reapply
5
every year.
Is this the first year you all have
This
gotten?
is the first year we've gotten them.
That's great. That's good that you, because it's not easy to get them.
With Bill, when you go to talk to somebody, you know, about giving, what is the quick thing that we can say? Because I can read this all day long, and I'm so dyslexic, it would take me forever to figure it all out. What is the skinny to say, you know, if you give $10,000, you're gonna get, you know, of whatever percentage back? Is there a way to say it quickly?
Well, I think the quick way to say it is, if you gave $10,000 to this charity, and this is a charity that you would like, and it's really, that charity, that $10,000 really only cost you, what, $1,900. That's the way I look at it. Now, as opposed to, say, giving $10,000 to VMI. You know, now it only saved me $3,500, so that cost me $6,500. I picked on VMI because Jay and I went to VMI.
All right. What year did they need to be sold in?
Well, you know, if you want a tax deduction in 16, you have to contribute. If it's securities, you have to have contributed on or before December 31st, or if you're taking it writing a check, it's got to be dated and received on or before December 31st. Now, they could technically deposit it on January 2nd, but if they've received it, then that's the year you get the deduction.
But as far as the NAP credit, it's July to July. Can you purchase one in
Yes, you could.
17 and use it in 17?
Yes. The only danger, and Winnie and I were talking about this earlier, is if you waited till January 17, if they're out of them, you've missed the boat.
Do you feel that when people give, they should be given that opportunity every year after that? Or have
Well, yeah, I can tell you from experience, once they start doing it, they go, oh, this is pretty nice, I want to do it next year. But what happens is every year the nonprofits are competing to get more credits or as many, and then you got new nonprofits come in. So the Commonwealth of Virginia,
do you feel
so in other words, the Commonwealth of Virginia says, well, wait a minute, St. James, we can't give you but 100,000 in 2018.
so it can go down?
It can go down.
Or away.
Or away. You know, for instance, if we were in a really deficit situation, Commonwealth of Virginia, it's one of the first things they look at. I think their whole theory is that, you know, the state of Virginia, we could collect your taxes and then make a contribution to these organizations, but we want some skin in the game from the people out there. So instead of us writing a check, you apply for these credits and we'll give you 65% of it. That the other 35 is your skin.
Is there anything we should be doing to stay on the good side?
Well, yes, I think that you try to use all these.
Use them all,
Yeah.
okay. And then does it sometimes go up?
Yeah, you can, because you can
Or do you
apply.
ask for it to go up?
You ask if, I would, when it's up to you, but if you used them all and say, hey, we got more people,
And apparently if you use them all, you are looked favorably.
you look favorably, yeah.
To get more.
That show that your organization's working, you're doing a good thing for the community. Any other questions?
Anything we should know?
No, I think you got it, and I think your handout that you sent out is right on it. If you have anybody that that needs additional help or understanding, I'm happy to help. Unfortunately, today is a kind of a busy day for me, September 15th, so,
All your
All right.
files.
Thank
yeah. All right, well, thank you all.